My thing is to be prepared. And I always tell my followers to have a certain amount of cash, because during a deflationary event, and this is what I believe we're seeing, a very short deflationary event, which lines up with the dollar whippet theory that happened, we put out about in June. Get ready for some deals. And that's the time to back the truck up into some solid projects. And then when all of a sudden the bottom comes in and all the banks go, okay, the system is legitimately melting down. Well, we still have funds to put in. These pension funds every month have money to put in. Where are we going to put that money? Well, gold, silver, some certain cryptocurrencies are looking at right now. They're going, hey, these are things that there's only so much of, and it's not being deflated away or inflated away.
Hi, everyone. Thanks for joining in. Welcome back to Wall Street Silver. Our special guests today are David Stein from Kuya Silver and Economic Ninja from the YouTube channel Economic Ninja. David and Travis, it's great to see you.
Thanks, Ivan and Jim. Happy to be here.
Hey, guys. Thanks for having me on.
Awesome. So the big topic in the news today is Evergrande, and we're all wondering, is this the next Lehman Brother moment, or does it affect us on a global scale? Is it limited to China? Economic Ninja, you want to take it off?
Yeah, so I've done a few videos, actually started doing videos on this about a month ago, talking about commercial-backed mortgage securities. And I wanted people to understand that, in my opinion, this is not the Lehman Brothers moment. However, on a dollar scale, it's going to be larger. But I'm looking at this as the Bear Stearns moment. This is the first big institution that is going to affect the world. It's not going to, make your pension go belly up. However, it's going to have systemic effects all throughout the world, way more than the bond markets. But we're gonna see pensions take a little bit of a write down and things like that. So it's not Lehman Brothers in the timeline. It's Bear Stearns, in my opinion.
Well, that raises a good point. I saw a very interesting image about this. We had Melvin Capital earlier this year. We had another hedge fund in the 20 billion range fall earlier this year. Now we've added Evergrande at the $600 billion level. And you just got to wonder, are there future dominoes that lead up to a major event coming? David, any comments on that?
I can't comment on how big Evergrande is, but I will comment on there is something, I think kind of strange going on with the Chinese markets and the interference from the central government there. They've sort of decided to make advantage of various businesses really that were I guess in their mind not in tune with their political agenda. And it looks like Evergrande could be the next example.
This is already sort of just to play into that point. Let me share. I saw this bit of information that was tweeted out that I shared. Evergrande's already having an effect on Australia. Iron ore futures have dropped 6.1%, which affects Australia to the tune of $6.5 billion for every $10 in fall in the price of iron. And there's speculation a lot of Chinese real estate investors could liquidate just to free up cash to stay afloat in China. And this is an interesting chart that shows the charts for iron ore and Evergrande. Evergrande sort of started tanking first, but iron ore sort of falling it right down along with it. So that sort of does lend to the theory that this is already having contagion effects outside of China. There's a lot of differing opinions out there about that. But, we had word from Jerome Powell here, and just let me share this.
Because this is going to go far.
Yeah. So just please, no one panic. This crash is transitory. Of course, this is a parody account, so that's not really Jerome. But I'm sure Jerome probably would say something similar right now. Don't you think, Travis?
Yeah. So, it takes me back to when Ben Bernanke was coming out once a month, addressing the nation, trying to ease people's fears in 2005, 2006, saying, hey, we've stemmed the crisis. There's no more mortgage crisis. By the way, it's impossible to see homes all fall at the same time all throughout the country. Back then, he was trying to push the transitory narrative as well when it came to falling home prices. The facts are, we know that Evergrande owns about 2% of all the real estate in China. That is insane, right? The company actually was formed right outside of the Great Recession. I believe it was 2009 when it came out into existence. So it was picking up inventory on the cheap, and they have holdings all over the world. There are Chinese firms that are buying up and have been buying up agriculture real estate and residential real estate and commercial real estate in America for the last 5 years heavily. And people don't understand how this works. I used to work in an industry where we sold farmland for farmers to hedge funds. And so we got to see the inner workings of how much these other countries own of our land, which is very scary. This might be a selling point. I haven't even covered it on my channel, where you might start seeing the Chinese government walk in and go, you know what, if you're going to sell some assets, we want you to sell the assets that are not in our country. Mm-hmm. And for that with that being said, Australia might have some real fears there, because if they are allowed to start liquidating Chinese real estate, well, then it's going to collapse their market. But if the answer is, hey, you know what, don't you own some stuff? If they own stuff in California or Florida, hey, that stuff's doing pretty good. Why don't you liquidate that?
Vancouver.
And that could cause some very serious consequences down the road.
You know, there's another angle to this, that Evergrande was possibly a Ponzi scheme. I guess there was something where Evergrande, as a real estate company, was selling direct to investors. I guess that was legal in China, these types of loans or investments. And they would take deposits on apartments or condos and then pay off earlier investors with the money. And they were even forcing their own employees to participate, loan us cash or lose your bonus.
Can I jump in on that real quick though?
Yeah, sure.
Because we're having a lot of narratives thrown out there, a lot of spins on the story, and this can be as simple, until it's proven. This can be as simple as a employer-owned pension fund that they are putting money in for their employees, and we've seen this throughout history. We saw this with Enron, where Enron had they were taking profits and they were putting towards their own pension for their employees, and then when the company evaporated, their pensions evaporated. We also saw it with United Airlines back, I believe, in 2005, 2006, where a court actually declared that they were allowed to default on their pension because it was money that was being made inside of the airline. It was being built up in pension funds for its employees, and so this could be that. And I'd hate to, until they prove that they're actually taking money from employees, I have a feeling that's what was going on, was that this is like a pension fund for their employees. And that's what they were, just buying more of their product, just like United Airlines was selling more airline tickets.
That's a fair take. Well, I guess it'll all come out in the next couple of weeks.
Or a couple months, because Lehman Brothers took a long time. Lehman Brothers was happening before summer of 2008.
Yeah. Well, let's transition. We're a precious metals channel talking about silver and gold here. So let's sort of transition this. Is this the fear trade that could, we all remember what happened back in March of 2020 when the market completely lost its head because of the initial China, virus issues. I guess we have a new virus coming out of China, and it's called Evergrande. But do we see like a big crash coming, and then that triggers the next fear trade for silver and gold? David, any ideas on that?
Just following on from what Ninja just said, that I was working in the business in a broker dealer back in 2008, and I do remember that although the crash was really quick, the lead up to the crash was very slow. And back earlier in 2008, there would have been news about Lehman Brothers. There would have been stuff about how it was just isolated to that particular company that was mismanaging its capital, that kind of thing. The proverbial, shit hit the fan, and that was in the fall of 2008. So It's really hard. It's really hard to tell, I think, this early what's going on. But, the other thing is just looking at the markets, before you have a crash, you do have this sort of slow burn downwards. And then people throw in the towel at some point. And it's usually because of some catalyst.
CNBC reported in August that most of the stock market is down actually 20%, where we have a group of stocks that are holding up the indices. The facts are the market could be up 500 points tomorrow, but what stock did that, And we have this high concentration, a small concentration of a few stocks that are holding up the market right now. But overall, on a broad basis, most stocks are not doing so well. Now, let's pull this into precious metals. In 2008, beginning of 2008, metals had peaked and they started their slow trend down. Things were wrong in the economy. We'd already been handed stimulus checks in 2007, and then we saw Bear Stearns burn down in the spring of 2008. In that time, silver and gold started to trickle down. Why? It's because it's an insurance claim, right? So anybody that's having solvency issues, they start to pull from their insurance and they start to raise cash because they need to make sure they stay liquid. By July, we knew there was a problem. By August, precious metals took a free fall. Now, the sad thing is, just like with, let's say, Bitcoin, as opposed to all the other altcoins, the gold and silver, when the metals take a hit, miners take a hit. But there's a big difference. In October of 2008, we saw the bottom come in precious metals. Actually, I believe the actual physical bottom was near November. But we started a multi-year bull run. And I think before we were talking, someone here brought up the fact of how much could you have, what would a mining stock be worth at the bottom of 2008 until, the top of that bull run? And the answer is just multiples of what the precious metals did. And then someone also brought up the fact that they had bought a share. Was it you, Jim? You looked at buying a share at what? Yeah, tell me that story. Tell that story real quick, and then I'll keep going.
I purchased some, back in March at the, during the initial COVID crisis, in March 20th of last year. Kinross, one of my gold mining stocks, was down at below $3 a share, and so I bought a ton of it right then. And even today, it's up 80 to 100% above that level, even with the decline in gold since, in the past, since August of last year. If you buy it right at the point of ultimate panic, you're probably going to be fine.
Exactly. Mm-hmm. Over the long term, you're going to be good, because why is gold and silver in existence, right? Well, it's real money, but for a hedge fund or a bank, it's insurance. And it's against uncertainty. That's what you're fighting. And so you'd said, Jim, at the highest point, that stock actually went to $10. Yeah. And so my point being is that there are about to be, we all have positions in miners, both, large miners, junior miners, and then exploration companies. My thing is to be prepared. And I always tell my followers to have a certain amount of cash, because during a deflationary event, and this is what I believe we're seeing, a very short deflationary event, which lines up with the dollar whippet theory that happened, we put out about in June. Get ready for some deals. And that's the time to back the truck up into some solid projects. And then when all of a sudden the bottom comes in and all the banks go, okay, the system is legitimately melting down. Well, we still have funds to put in. These pension funds every month have money to put in. Where are we going to put that money? Well, gold, silver, some certain cryptocurrencies are looking at right now. They're going, hey, these are things that there's only so much of, and it's not being deflated away or inflated away. And so why don't we start doing that? And I think we're going to see that coming in. When? I can't tell you, because I believe the big one's coming next year. But I do believe personally that I think we're going to see metals at a much better price at the first of this next year than we do today.
Yeah, just going back to the credit crisis crash. Just worth mentioning that the precious metals, gold and silver, they bottomed about 6 months before the stock market bottomed. Mm-hmm. So they bottomed in October 2008. Stock market low was March of 2009, and so there were a lot of gains to be had by obviously rotating into precious metals at the right time there, and then If you gave a gold example, and a good gold example in what happened in 2020, My company wasn't public in March of 2020, but if you look at the biggest, kind of pure silver play at the time, which was First Majestic, they actually tripled from their low in March 2020 to, the high later that year. And they're still up 100% from that low, even after this recent sell-off. So, and they're a larger cap company. Obviously smaller cap companies like my company Kuya, you'd expect the upside to be even greater. Who knows when and how low the bottom's going to be, but it could be a very, very exciting time here to be investing.
Well,
just for the record, I had out of the money call options on First Majestic during that time, 2,300%. It was just a thrilling time to be alive. So
yeah.
a great example of back in the
Congratulations.
Congratulations. Yeah. So there was another company that this Contagion has already spread to. I saw a tweet from Kyle Bass, and this one's traded on the Hong Kong index I guess it's called Cynic, or I'm probably pronouncing that wrong. Mm-hmm. But another Chinese real estate developer stock, I guess in the past 24 hours, because I saw this tweet this morning, it's down 88%. I don't know if this is because of real issues this company has, or if it's just in sympathy, but it sounds like, I don't know, maybe their credit lines got shut down or something. But Ninja, any?
Yeah, so this is an exciting part of investing. So I'm glad you said in sympathy, because the facts are we don't know if this company has anything to do with Evergrande, has ever done business with them, right? Mm-hmm. What happens is when we talk about fear in the market, people act, non-investors, people that aren't seasoned, have been around for a long time, that have had the bumps in the road and the gut-wrenching experiences, they go into panic mode. And this is literally blood in the streets. When you see a company falling off a cliff like that, they could have a stellar business model. And this is the most important thing to understand. And this is how it could get very bad in the next couple of weeks. When a company that's doing very good all of a sudden finds their share prices plummeting, regardless of their business model, if they are dependent on raising capital to keep their operations going, depending on how they built their business model, it can literally put them into bankruptcy and close their business down. Okay.
Oh, yeah.
That's something very misunderstood in the marketplace, because a lot of companies are debt driven. They don't, pay off the property like McDonald's does, let's say, and then they own the real estate. That's not how a lot of companies function. They are just barely, depending on how they do their taxes, staying by, and that's very important. And that is how a collapse always happens, is because people say, if you're a real estate company and you're in China and that one's in China, it's going down, then that means you're going down too. They sell off the shares. Now, hopefully, here's the bright lining in this. A really awesome CEO would be sitting back with a little bit of cash, and he would come out and go, you know what? Our company's good. I'm buying back my stock. If you guys are that crazy, I'll do all my due diligence, do all the right documentation. I'll buy back my stock at an absolute, fire sale. But the facts are, a lot of these companies do not have enough free cash flow to be able to take up an opportunity like that.
Well, I think one of the reasons Evergrande, as recently as a week before, Evergrande was putting out announcements. Oh, there's no problem. There's no problem. We're totally fine. But just the whiff of there might be a problem was enough to cause, that they're rumored to have 300 billion in debt, 600, I don't know what the exact number is. But I also saw a number that 30 billion of that was in short-term commercial paper. Now, these are the short-term 30-day loans that they usually are expected to roll over every 30 days. So if the whiff of bad news starts getting in, well, those people who, all right, I just got my money back from 30 days. Am I going to roll it over again with Evergrande? Or am I maybe going to say, I don't like what I'm hearing from Evergrande. I'm just going to go find something else for the next 30 days. And then all of a sudden, Evergrande may have been fine 2 weeks ago, but now all of a sudden they've lost access to the commercial paper market because no one wants to roll over their short-term loans anymore. That can take a totally healthy company and just turn it into a disaster within 30 days.
Totally agree.
Sort of a self-fulfilling prophecy. Any final thoughts?
That's similar to what happened in the credit crisis.
Yeah. Yeah, well, isn't that what essentially what happened to Bear Stearns and Lehman is all of a sudden all their counterparties said, I'm not going to trade with you anymore. I don't trust what's on your balance sheet. Therefore, boom, even though they may have been totally doing everything right 2 months earlier, now all of a sudden, once your credit lines are pulled, if it's that type of business model, once your credit lines are pulled, you'll fail no matter what.
Well, the problem with Lehman is that by the time Bear had already collapsed, the term mortgage-backed security was so, and these NAGAM loans was such a toxic word that creditors just did not want to deal with anything. And that's like to your point of this secondary firm in China that's collapsing. There could be a point in the next couple of weeks that it's not only Evergrande that creditors don't want to deal with. It's if you're involved in real estate in China, I don't want anything to do with you. So this could have more of a contagion effect on other companies that have a solid balance sheet, but just because of that negative thing. And that's why I said in my video last month, you're all about to know the term CMBS by January 1st. And I said, most of you don't know what it is. And still those videos are getting very little play. I'm surprised, but it's because it's not a keyword yet.
Mm-hmm. Yep. Well, with that, thank you very much, gentlemen, and we'll stay in touch and have you back to discuss things later in the year.
All right. Thanks, guys.